Welcome everyone to the CFO Swinger Watch Reports technical analysis video for the first full trading week for the month of July. And this week's technical analysis video will be on the July 8th through 12th report. Now, before I begin, make sure you guys are always reading the newsletter first before you watch this technical analysis video. Remember that I have way more details on what our actual swing trade ideas entail for this entire trading week. For example, I provide the exact option contracts that we need to be looking to execute on for each swing trade idea, or the exact 3-point game plan for each swing trade idea using equity. And that's just a small snippet of what the weekly report says. So make sure you guys are not only watching these technical analysis videos. With that, let's take a look at the markets. So the S&P 500 has made yet again a new all-time high. And if you guys remember from the private CFO Discord, I provided you guys with some targets for the broader markets like the S&P 500 and NASDAQ. And for the S&P 500 or SPY, I said that 550 is most likely going to be retested and most likely we'll be seeing a new all-time high. And for NASDAQ, I said that we'll most likely be seeing a retest of 490, and that's exactly what we got here. So let me just show you guys. Alright, so we have QQQ and we have risen all the way up to 496.60. And so with all of these broader indices making new all-time highs, we are, in a sense, getting slightly euphoric. However, as we are heading into earnings season, which is very soon, in about 2 weeks, we should be seeing some sort of a pullback in the meantime. And I'm not looking for, a 10% crash. All I'm looking for is a small corrective dip. And it seems a lot more likely that we get a dip compared to, let's say, getting another 5 to 10% move upwards, or as we thrust to the upside into new all-time highs, or to no man's land where we've never gone before. And so from a probability standpoint, it seems a lot more likely that we can see a small move back down before we see another longer term move back to the upside. I talked extensively about kind of the earnings season that's coming up, a bunch of economic data points that can lead into a market dip, and etc. And so make sure you guys read the market summary part of the report before you watch this technical analysis video, and you guys will understand what I'm saying here. So the S&P 500, again, we're making strong moves to the upside. Now, if you do see a move back down, all we need to see is a retest of this 550 level, or specifically 550.20 level. And with that, that could also be a retest at the daily 10 SMA, since again, we are moving away from the daily 10 SMA, which is again a great indication that we are in an uptrend. Now, if we do see a little bit more of a corrective dip past 550, then the maximum that I think the market can move down to will most likely be around 536.50 to around 535.50. Now, why that tiny range? Well, first of all, we have a very small gap area that we need to fill here. This is a nice gap up area that we saw back in June 11th through June 12th. And obviously the reason why I say a small gap, because if you take a look at the previous gap ups, it's pretty small compared to all the other gap ups that we've had since even last year in 2023. So with this relatively small gap, if we do see that 5% correctional move to the downside, there is a good chance that we can be seeing a nice small gap fill that can occur as we head towards that 536.50 to 535.50 area. Now, if I take a look at this from a percentage standpoint, from last Friday's close Okay. Right, we're still within around a 3% move to the downside if we do retest 536.50 from last Friday's closing price. And so obviously, if you were to get that 5% corrective move, then I would expect to see a little bit more of a run to the upside. And there's a chance that we can also possibly see 560 being the major target level before we see any type of a euphoric market top that leads into a sell-off, right? And so, you know, at some point, we're going to need to see some sort of a corrective dip based on all the other conditions that I've outlined in the market summary. So again, make sure you guys read the report first. All right, so with that, let's take a look at IWM. So this is a quick update on small caps. So small caps have, again, been a very, very hard name to look at it from a short to mid-term perspective, which is the reason why we're looking at this from a longer term perspective. And again, which is another reason why we have this on the longer term perspective, as we have a long-term position using call option contracts that expire months out, right? 6 months out. So, you know, for IWM, this is going to be the long-term game. And it seems like the price action is also telling us that, because the price has basically not gone anywhere since last year. And it's at some points earlier, I would say last month, right? A couple weeks ago, we were seeing prices that we saw all the way back in 2022 and even in, I believe, 2020 and 2021. And so the price hasn't progressed, and it's not really comparable to even the S&P 500 or NASDAQ, because again, this one has been moving sideways for multiple years. And so with this consolidation comes a great chart pattern that's been forming here, which is the nice cup and handle chart pattern. However, as I've mentioned last week, there's a long handle that's been forming here on the chart and handle, cup and handle chart pattern here that's been forming, and this handle has been getting a bit too long. And with this type of longevity that's been forming here on this specific handle of this cup and handle chart pattern, we have been forming now a nice wedge chart pattern. So basically, with all of these different chart patterns that's been forming, because again, number one, a cup and handle chart pattern is a bullish chart pattern. However, now that we're getting this wedge chart pattern, which is inherently a neutral chart pattern, it clearly indicates to me that the price action and the price trend still needs a lot of work, which means that we're going to be seeing a lot more sideways price action for the short to mid term perspectives. And that's something that you guys need to accept before you decide to grab a long-term position on IWM. It's one of those names that you need to start looking at for an accumulation. So IWM here, again, this is a longer term play, right? It's one of those positions that you'll be having as a main core position for the longer term perspective. So IWM, definitely, you need to be having a lot of patience. We might be seeing small dips below this magnetic psychological whole number level of $200, as we saw last Friday with the low of 199.88. But again, if you're able to hold through and keep that long-term mindset with added on patience, this will be a long-term winner. All right. Okay, so with that, let's take a look at our first name. So this isn't our first name. Our first name is in fact SRE. So SRE has been showing a very, very tight and literally textbook perfect bull flag, right? And so what we have here is a very long-term consolidation, right? We basically haven't moved anywhere since last year, last year, and last year as well. Right? So with SRE here, if you take a look at this from a weekly time frame, it's not a sexy, what you consider a sexy name. Why? Well, this one's quite a wicky name. You can clearly see all the long wicks at the top and at the bottom of these weekly candlesticks. However, if you take a look at the current state of this weekly time frame, it looks very, very good. And so what I'm looking at here is a nice long-term base that's been forming since 2023 and 2022. And we have a nice lower range level of support sitting at 69.50, which I'll make green here. Okay, and we have an upper range level of resistance at $78. Okay, and obviously there is a higher level of resistance sitting at 84 here, but I will talk about that later. So SRE here has been making a very long base. However, very recently, since last year and this year, we have shown a nice pivot where we've been able to come right back and snap right back towards the 69.50 level. And at this point, what we have essentially created is a nice double bottom, right? And a nice sideways W chart pattern. So if you guys can't see that, let me actually, get my brush out here. So we have a nice W or slanted double bottom chart pattern. And with this double bottom chart pattern, we have a nice neckline resistance right at that, coincidentally, $78 upper range resistance level. And so with such a tight looking weekly time frame now, right, as we're forming this very nice tight and textbook and perfect bull flag, we have been riding the weekly 10 SMA perfectly. And every single time that we see a nice small dip below the weekly 10 SMA, we immediately snap back up and close above that on the weekly time frame. Now, the only thing that really concerns me is that the weekly 21 SMA, this light blue line, has been slowly curling up higher. However, it is a bit too far away for my own taste. I would rather see the weekly 21 SMA catching up before we see an actual breakout. So that means there is a possibility that, or even the probability that we can see a small fake out move to the downside, where we see a shakeout of all the weaker buyers that were stuck in this small bull flag. Well, small in accordance with the weekly time perspective. And we can be seeing a small move down where we see a very quick retest of this weekly 21 SMA, and then another quick pivot back towards this bull flag where we immediately come back in to this bull flag that's created by this descending resistance trend line and this ascending support trend line. All right, so there is that small possibility, so you guys can think about that. However, ideally, we would not want to see that when we're seeing such a great textbook perfect bull flag. Now, if you go back on the daily time frame, everything looks picture perfect, right? Even more picture perfect, because we're seeing signs of accumulation. And we see that with these very large volume bars that you see here on the daily time frame. And we saw that last Friday as we retested this ascending support trend line, and as we retested the daily 50 SMA, which we recently saw a nice golden cross as the daily 50 SMA shot over the daily 200 SMA. And so the price is now above all of my major daily SMAs, the daily 10, daily 21, daily 50, and the daily 200. And so all the signs are pointing up. And so if we're able to break over this flag, which will be over the 76.55 entry level for us, then we should be able to see another retest at that major resistance level of $78, which will also become and can become a new breakout entry point from a weekly to even a monthly perspective, as again, we've had that huge sideways base that we've been forming since last year and last year. So I have provided you guys with all the profit targets and the entire 3-point game plan. So make sure you guys read the newsletter to read all the juicy details that I have for this name. And again, lastly, this is not a quote-unquote sexy name, right? It's a utilities name. And so if the markets do get defensive, then this one will get the attention that it deserves. All right. And last but not least, we have Netflix, which I've shown you guys before I talked about SRE. So Netflix, very quick TA is needed here, right? So simply put, we're looking for a nice breakout to new all-time highs. And if you guys are wondering where the all-time high print is, it's all the way back over here at $700.99, right on this candlestick of November 17th of 2021. So 799, right? Excuse me, 700.99. It doesn't seem that far away. And on Friday, we're pretty close. So the high of Friday was $697.49. However, near the end of Friday, we saw a nice push back down, which we tend to see near the all-time highs. And so Netflix, very simple and very strong uptrend. So what we saw back in April was a nice gap down and earnings moved down. And what resulted from this gap down was a very low volume melt up. And as we melted to the upside with very low volume, we completely filled in this gap down, this very large gap down, and we continued to move on higher and higher until we broke out of this year's highs. And as we're making a new high for this specific year, this fiscal year, we had some very textbook price action. So let me actually go into detail here. So we had a nice impulse move to the upside, and then some sideways price action, and then that resulted into a new breakout, and then it resulted in some more longer term sideways price action or simple consolidation, and then yet again we've had another breakout to the upside, and now we're hanging right below the all-time highs area, and we've yet again started a new consolidation or new sideways period. And so it makes you wonder, can we have yet again another fourth breakout to the upside, right? And so obviously we have yet to see that. However, we are sitting right underneath all-time highs with a very strong textbook uptrend, right? And so you know, it really makes you think that Netflix is yearning for a new all-time high print, and that's exactly what we're going for here. So if we're able to see another retest of 687, which happens to be the resistance level of this current consolidation and third consolidation area, we should be seeing a nice bounce at 687, which gives us a nice earlier but riskier entry point for a long-term position. And if you guys don't want to wait out for a potential retest, or if you guys want to be less risky, all you need to do is observe a nice move back up higher until we break over the previous high of the day, which was last Friday's high of 697.50 or 49, and we can grab an entry point, which is the reason why we have a nice long-term entry point over 698.10. That will be our official breakout continuation entry point to the upside, and potentially can lead us towards that new all-time high print. So again, we are literally magnetically attracted towards that $700 whole number level, this psychological number that the price is, you know, reacting towards. So again, Netflix, very simple technical analysis is needed here. Again, very textbook uptrend, impulsive move to the upside, consolidation, impulsive move to the upside, consolidation, impulsive move to the upside, and consolidation. This is our third consolidation, which can potentially lead into our third breakout, or essentially the fourth breakout, right? So for Netflix here, again, if we're able to see this fourth breakout, it's most likely going to be the last one, since Netflix also follows very closely to the markets. And based on what I've said earlier in this video, if the markets do decide to have kind of a euphoric market top sell-off at some point in the next couple of weeks, maybe before earnings season occurs, then we can see Netflix also following suit. So make sure you guys are reading the entire game plan that I have for Netflix, so that you guys know and understand when we need to get out for this ticker and this swing trade idea. Alright, so that is it for this video. If this technical analysis video was very, very insightful and most importantly, applicable, make sure you guys leave a like down below. And if you aren't subscribed yet to this channel, make sure you guys hit that subscribe button. And for any newcomers here who are interested about the CFO Swinger Watch report and the technical analysis video and how you guys can integrate it into your own trading journeys and your trading life, make sure you guys DM me on Instagram at ChartsFocus1. I'll be giving you guys a full rundown on how you guys will be able to use it to your benefit and how you guys will be able to effectively apply it to your own trading journey. All right, so good luck, and I'll see you all tomorrow morning.